So I'm a big advocate of, I cannot overstate the power of community when it comes to wealth building. Now, everything changed for my partner and I when we were being intentional and joining specific networks of super successful people, similar to the one we're running now. Because when you get into those rooms, you get access to deals you never knew existed, find out about new strategies to build wealth and save on taxes, and you can invest together at scale.
Welcome to the Brothers Frontier podcast, where we believe you can learn more to earn more. Today, we have Ryan Twomey, a man that comes straight from financial services with the New York Stock Exchange, transitioned into real estate investing back in 2020, and has over time slowly grown from house hacking into residential properties, and has built a strong foundation to the point of now syndicating through his own personal business, TR Capital Partners. Right, his story is packed with insights on building wealth beyond Wall Street. So we're excited to have you on today, Ryan. We're really excited to dig into your story and learn more about the success you've had.
Yeah, it's good to connect with you guys. Appreciate you guys having me on.
Absolutely, man. Absolutely. So kind of tell us, how did you first get started at the New York Stock Exchange, and then why did you decide to leave it, right? That typically is most people's goals. But why are you trying to transition?
Yeah, so like you said, I started in the financial services world with just a corporate background. I was doing a lot of wealth planning, client management, things like that, and I didn't like it. So I sought out a role that was more operational and analytical, a numbers guy. So I joined the New York Stock Exchange or the parent company of the New York Stock Exchange, doing a lot of analysis for the bigger banks, mostly with corporate actions, dividends, things like that. After a while, just didn't feel like I was growing in that role, and I kind of got sick of it, caught myself coasting a little bit, and wanted to get out of the corporate world. So that's when I started investing in real estate, doing small stuff, triplexes, duplexes, things like that. And then that's when I also realized that being a landlord is kind of a tough thing and not exactly passive in any manner. So pivoted my business there as well and started syndicating for these larger properties to invest at scale, get more people involved, and then increase cash flow for everyone that's invested in these properties.
And just out of curiosity, were any of your analysis back at your times with the New York Stock Exchange involved in real estate or mortgages? Was there some kind of correlation or just totally a 180?
I had no correlation with real estate. Nope. It all started from when I just dove in head first and with my partner and started doing those triplexes and duplexes. So a lot of it came from when I was doing wealth planning. Many of the high net worth people I was doing it for did have real estate in their portfolio. Wasn't like I got, a lesson in it, but I did notice that fact and knew I had to get involved in some capacity.
Awesome, man. Yeah. So definitely starting out with your partner, were those like house hacks that you both were going down together? You're getting one room, he's getting another, or how did you guys start together?
Yeah, exactly. So essentially how it happened was, this is during COVID. We're both living at home with our parents. He texted me one day and wanted to get an apartment together, wanted to go find a place. And I rebutted with, how about we learn how to be a landlord and we buy our own place, start building up a little portfolio. Hopefully that income will pay for our lifestyles and we could both quit the jobs that we hate doing, right? So he was all about it. I kind of showed him what I was learning for the past year or so and teaching myself. We dove headfirst into that house hack. It was a triplex on the first deal. We lived in the bottom unit, renovated the other two, rented them out, lived for free, made a couple $100 a month on top of that for like utilities, things like that, and started to scale up from there. So a lot of imperfect action right away, kind of threw ourselves into the fire, but I wouldn't take it back for anything.
Yeah, absolutely. Right. You didn't start off with 110, you went to 2, if not more. So to that point, were there any kind of struggles with these early tenants that you're taking on more than one? You're kind of jumping into the game. Was there some stuff early on you had to learn to slowly grow into more of the commercial world?
So we probably should have vetted the tenants a little better. That's definitely something we took out of that. But I think the management of the property, the maintenance stuff, as we started to scale with the smaller deals, definitely taught us how we have to operate these larger deals as well. And connecting with the right people as far as property management. Now it's more of a team sport for us. We have people that are in various different roles so we can execute on these larger deals. But putting yourself into the fire in the beginning definitely taught us a lot of lessons, things we never knew could happen, would happen. Maybe we're a little naive, who knows? But again, with every lesson or pivot or failure or pivot, there was a lesson to be learned. And now we just apply those things at a larger scale and can kind of foresee the issues that are going to happen with these properties to better our operations.
Absolutely. So talk us about that transitional project, right? When did you finally get out of that small residential projects and when did you eventually get into some commercial jobs? How did that happen?
Essentially, the goal for us was to create that passive income to quit our jobs. Like I said before, we quickly realized that the landlord horror stories, it's not a matter of if, it's a matter of when they'll come true. So we knew that if we were going to be scaling, essentially what we'd be doing is not buying freedom, we'd be creating another job for ourselves. So we knew we had to make that pivot. And this was about 2 years ago. So we hired a business mentor, hired someone that has done this at a large scale. He owns a couple $100 million worth of real estate, paid him to teach us how to do what he does. He helped us set up our business. We began intentionally networking with people in order to take down these larger properties, build our teams in various states to do it all across the country. And from there, we just, again, dove headfirst into it. Thankfully, we're surrounded by people who have been doing this for 15, 20 years, and they're a part of our team. So when we operate these deals, they have other people in place in those areas, such as the property management, different attorneys, everything that you need on the back end. And we help them essentially bring the capital in and operate these deals from an asset management standpoint. So we went from having 5 units to 574 in about 18 months after we started doing that, and took everything our mentor taught us and just ran with it.
And those are huge growth numbers, right? We're talking 10x, 100x style work. We're looking at returns and stuff. So, and not that we're trying to light you up a little bit, what were some of the major things that your mentor said, hey man, we gotta get rid of this. We gotta fix that. What were some of those things that you had to grow, you had to change your mindset on to start doing some of these bigger deals?
So you kind of took the word out of my mouth. I was going to say it's mindset. At first, we didn't really know what our options were when it came to real estate investing. We followed the traditional path. So we only thought that, being a landlord was our initial route. I'm happy we took that route. However, those large apartment complexes you drive by on the highway all the time, we thought it was some super rich guy that owned it, or maybe a big bank like Goldman Sachs, Morgan Stanley. But in fact, it's people just like me and you. We syndicate those deals with enough people to essentially compile their resources together, invest at scale, and do it across multiple different markets since we have the resources available. So the big pivot for us was mindset, and our mentor's saying per se is think bigger. So in order to when you think bigger, you do bigger. So your mindset drives your actions, which drive your results. And creating a clear framework for that, which we follow, is called the what, why, how framework. What do you want to accomplish? Why do you want to accomplish it? How are you going to get there? And to have daily action steps with monthly and quarterly progress points to hit. And from there, when you break it down, reverse engineer the goal, it becomes a lot more attainable than, just having this daunting figure out there. 500 units did not seem accessible to us at the time. But when you break it down into smaller pieces, you definitely you approach things very differently, and it makes things far more attainable.
So would you say in that case, it was almost, you feel like it was yourself holding you back just because you didn't have that thought or that mindset of it? There was just so much that you had to achieve to get there that it was almost your own perspective on how to do it. And so by having this mentor help lay out those steps, it became more attainable.
Definitely. I think part of it was limiting beliefs, like kind of what you're saying. Another part was I just simply didn't know that these opportunities existed. So I'm a big advocate of, I cannot overstate the power of community when it comes to wealth building. Now, everything changed for my partner and I when we were being intentional and joining specific networks of super successful people, similar to the one we're running now. Because when you get into those rooms, you get access to deals you never knew existed, find out about new strategies to build wealth and save on taxes, and you can invest together at scale. So these deals are typically not accessible to the public. They're not traded on public stock exchanges and things like that. So I've learned over the years that to find them, you have to kind of run in these private circles. And if you're not a part of those networks and communities, you'll often miss out on them.
So I'm sure to even get to the point of kind of recognizing between you and your partner, hey, we kind of need a mentor. We're kind of, some stuff's going on here, or we want to grow. Whether stuff was going good or not, we want to grow. We want to become more than we are. How did you go about taking that first step to even find the right mentor, right? Because I'm sure, like many others, you kind of got to vet them a little bit. You want to feel them out. They want to fit with you, right? Just because they're not necessarily a bad person or a bad mentor, but they got to fit with your dynamics. So what was the process in selecting your mentor for you guys?
For the most part, we wanted someone that had the same energy as us. So he's a very high energy guy. Another thing was that he's been there and done that. He's not some guru on social media. Like, he's actually done the business, which is a big thing for us. But we're both have a growth mindset, and we've realized that books and podcasts can only get you so far. The fastest way you can learn, and it's almost like a cheat code, is to learn from a coach or a mentor. I hire coaches still to this day for various parts of my business. And I will tell you, there's little nuggets in there that you can apply that will catalyze your growth, 10x in just a short amount of time. So I do refer to it as like a cheat code when it comes to your personal growth, but also wealth building in general. It's more of a team sport. The larger deals you can get into, the bigger you think, the more growth there is, since you are taking down these larger opportunities, whether it be in real estate or business or really anything in general.
And was this someone that was already involved in a network that you were in, or was this someone you found as you were guys kind of spreading your word and your message, you found in a group later on?
So we sought him out. We were not really a part of any networks that I would say had people like this involved. We weren't very intentional about building our network either. So our initial plan was to use all of our own money to scale. And to do that with these small deals, you have to essentially save for a down payment, right? So you're waiting a year. You used to save your money for a year. You buy the property the next year. You kind of repeat that cycle over and over. So we did realize that that's a long way to get to the goal we wanted to achieve. And then on top of that, about 7 to 8 months in, we'd experienced those landlord horror stories, and we realized we didn't want to do this anymore. So we actively sought out new ways. He was highly vetted. He was highly, there was reviews on him. We did our homework, met him multiple times before we ever paid him to actually mentor us. But the way we looked at it in the past was kind of that would be an expense. Now the way we view it is that is an investment that we're going to get a huge ROI on, which is another mindset shift we had to make in order to actually take that step.
Absolutely. And speaking of some of those expensive, right, some of those taxable items, was the company already set up when you guys were involving the mentor, or were you still just involved in kind of the smaller residential properties at the time?
Just small residential. We didn't have a company. We just had essentially 2 properties or 3 properties in our name. So, 5 units. And from there, we just were essentially seeking guidance on how to scale faster and much larger.
Okay, so this was more than just a mentor for getting into deals. It was, hey, we got to get the company set up. We got to get the people on board. We got to start spreading the name. Could you get us a timeline on that venture? How long did it take you to get to your first deal?
So after it was literally every step, even our logo. He showed us where to find our logo. This was very broken down for us. However, after we got everything set up, it probably took us about 7 months of grinding it out to find our first deal, get it financed. We actually failed on our first opportunity. So we weren't able to bring in enough capital to close on the deal. The lender pulled the funding from us, broker pulled the deal, and this was like a week before he was supposed to close. Immediately kind of had a little bit of a blow to us. We got right back out there, built our network out, and ended up taking down a deal about 2 months after that. So in total, our first deal was about 7 months after setting the business up. From there, we've done 3 more since then in about a 6-month time span.
Hey, Frontier family. If you're finding value in today's episode, then Nathan and I want to tell you about a Facebook and LinkedIn community we're trying to grow of like-minded entrepreneurs who want to learn more to earn more. We share and discuss relevant topics, strategies, ideas, and overall ways to grow your net worth. So if you're interested in learning more, check down in the description of this video or this podcast to find the links to those pages. All right, let's get back into it. So there's a good 6 months of really just trying to figure this stuff out, trying to work through it, and you still had some failures. Talk to us about overcoming that, right? Because I know in the world of being a GP for these syndication deals, sometimes your reputation is what a lot of people go off of. They expect that you do your work, that you do your numbers. They're kind of looking at you more personally to vet what you're about and how willing you're going to do to put this deal together. Talk to us about overcoming that failure. How did you continue to encourage new investors and new lenders even?
Yeah, so the lenders, that came because of our network. So we have someone on our team that's called our deal sponsor. They're the one that has the high net worth to get these loans. So they've had a good track record. So that wasn't an issue. Thankfully, when we did fail, it had nothing to do with other people's money. We weren't losing money. We were hitting we still have hit all of our target returns and actually exceeded them. It was more of a personal failure. So we quickly found out that we weren't doing enough to get to where we wanted to be. It wasn't exactly the best feeling. When you come down to that reality, you at least put yourself in control to make that change. So I'm not sure if you know Jocko Willink, you probably do. He's a big advocate of extreme ownership. We kind of embrace that role because we feel that if you do take that ownership in whatever stage of your life or whatever you're looking to do, you do take back that control and can actually improve upon your processes and systems and get better results on the next thing. So we will probably have many other pivots throughout our business and lives and careers. But taking the lesson behind that and actually applying it to the next thing is really where the growth happens.
Absolutely. And we may have got ahead of ourselves a little bit. Tell us about the company. Where do you guys focus your investments in? Are you trying to tackle all projects? Or do you focus in a certain area, a certain size? What's your kind of target project goal? And then obviously so that it fits your investors' objectives too. Are they trying to line that up?
Yeah, so I guess to give you an overall view of the company, so TR Capital Partners is a private real estate firm for business owners who are pretty much anxious about the stock market or this economy, just want more stability when it comes to their money. Now, our investor club, a lot of people involved just want to reduce their tax bill, generate other streams of wealth, or get involved in alternative investments, but they work long hours being business owners. So they just don't have the time to do so. So we help them passively invest in real estate, specifically a large apartment, where we handle all the hard work and they get to enjoy the benefits and the peace of mind that comes with these types of investments. We are targeting properties 50 units and above, and right now focused in Springfield, Massachusetts for the next 3 to 5 years, with a goal of getting 1,000 units in that market before we move on to the next one. So we're focusing on primarily emerging markets where the growth is not priced into the market yet, but it is on the horizon. And inside of those markets, focusing on underperforming properties where we can have a value add component through rent bumps, renovations, better operations. That way we can boost the actual value and provide as much returns as possible back to the investors, where we're typically targeting about 2 to 2.5x on the initial capital.
And is the intent then to add the value and pull back out to then put it in the next one and kind of turn and burn that money like most flipping is? Or is it more so the refinance structure where you'll maintain that asset but pull money out and use it again elsewhere?
So we would typically hold the properties for 5 to 7 years. So we won't sell as a typical flip, but we will refinance in years anywhere from year 2 to 4. And that depends on how much equity we have in the deal, obviously. The goal of that being to get all the investors' initial capital back as soon as possible. That way the risk is out of the game, essentially. However, they still retain their equity portion. So they're still getting their passive income, they're still getting the equity, and they're still getting their tax benefits every year. They just have no more risk in the deal. And obviously the hopes of that is to reinvest into something more to keep growing that money. However, that's obviously up to the investor. But that is a capital event that's non-taxable since it's not any profits yet. It's simply just getting the risk out. So they're essentially getting infinite returns at that point.
Right. And as we dig deeper, I kind of want to reiterate too, the thing that I love about you and your message is you're still relatively new in this venture, right? Like you've only left your previous job within the past year. Is that correct?
Yep. Yeah. This year I went full time into business. Took us me and my partner about 18 months to do that. So we finally made our side thing our main thing. So it's been a pretty good transition.
That's awesome, man. Growing the side hustle into a full-time career, that's something people can dream of, dude. So to that point, for someone wanting to get into the atmosphere of syndications as they do some of their own stuff on the side, tell us about how you went about networking with others to find those sponsors, those LPs, whoever may be involved in your project. How did you go about networking yourself and your business to put those deals together?
So a lot of it was sharing my own story. So I'm very, active on LinkedIn. That's probably one of the better places if you're looking to get into business as a limited partner, so as an investor or a general partner and actually manage these deals. There are so many people that are involved in this type of business you can learn from, network with, and everyone's looking to do deals as long as, obviously you're a good person to work with. So I would say just tell your story. A lot of the time what I'm sharing there is things I have done, the failures I've had, the successes I've had, why I've done what I've done. Like I said before, I have followed that what, why, how framework. So pretty much every decision I make is based around that. And I think a lot of the time people relate to stories, and a lot of the time they will relate to yours. There's something unique about it, whether it's the emotional part, your actual why behind what you're doing, or maybe you just have an actionable lesson to share. But the more you do that, the more your brand grows, obviously. And from there, you continue to network and talk to other people about what your future plans are, and if they align, most likely you'll be able to get deals done together. But I do stress it's like a marriage. You're holding these properties anywhere from 5 to 10 years sometimes. So make sure you do like the person and you vet them out before you hop into a partnership right away.
And outside of networking, are there other strategies on the back end that you guys are implementing as you kind of grow and scale your operation?
So I guess kind of. So we always like to add value to our investor club. So we're always trying to give them actionable tips, resources, introduce them to other people to help them grow their wealth. A lot of it has to do with tax planning, wealth planning, things like that. Most of the people we work with are very sophisticated, so they most likely have advisors and things like that. But we do like to somehow add value to them in some way. So we're always nurturing our list. We're always talking to people, making it more of a community feel, because relationships are everything in this business, whether it's with investors, brokers, lenders, sponsors. Everything's about relationships. So we do cherish that and come from the position of service to make sure we're doing right by them, whether it's preparing them to invest, educating them on the market or best practices. I recently sent out a passive income calculator that was something that I wanted to achieve. I needed to know exactly how much money I needed to invest at whatever percentage to achieve, paying my bills with passive income. So I just provided them with a tool I created for myself. So simple things like that, we're always looking to do behind the scenes once someone is in our investor club. It's not for everybody. I do stress that. You take someone with a long-term vision, specific mindset, and certain investment goals. However, once you are a part of our club, we definitely try to nurture and, give you as many resources as possible.
And it seems like a lot of what you're talking about really is just the willingness to dive in. You have the drive. You want to provide education. You want to provide value. A lot of it really maybe comes out of time and place, right? In terms of these deals, right? People want to work with you because they know, hey, this guy's young, he's got time, he's got the drive. He'll put the deal together because he relies on it, right? This is what he's doing now. Do you feel like you kind of agree with that? You're kind of in a good time and place to be in the role that you are?
I do. And I've had the past experience of going through the landlord headaches, which is a lot of the reason that deters people from investing in real estate in the first place, especially business owners. However, we do have other people on our team that have been doing this for 20 years. So, you have people like me and my partner who are fairly young and new in the business that are going out, finding the deals, talking to people, educating everybody. And then you also have the experienced managers on our side, the asset managers, the sponsor, everyone like that make sure the property is operating efficiently. So as a team together, because this is a team sport, we've been able to exceed expectations or the promises we've made to investors, which feels really good. However, I think that right now is the best time for me to actually be able to grow this business, as I do have the time, the energy, and I love just talking to people about it because it's made such a huge difference in my life.
And do you feel like a flip side that's ever hurt you? Do you feel like the fact that you're still in kind of the early days of this company and this venture, has that ever turned away investors or turned away sponsors, or has that ever hurt you in any way?
Not sponsors, investors haven't directly told me that. I'm sure it has, though. I'm not gonna think that wasn't something that I had to overcome. However, a lot of the times, the people that we do speak with, again, they're fairly sophisticated, and they realize that wealth building is a team sport. So we do tell them, we're not the only ones that are managing these properties. It would be very hard to do with a 2-man team to manage a 150 unit asset, right? So we tell them we do have a team of people in place. Everyone has their set role. We have standard procedures that we follow. In some cases, in the very, very beginning, when I wasn't as experienced in the space per se, we would have the sponsors join some of those calls with investors just to make sure that they were on the same page, they were comfortable with what they were doing, and everything we were telling them was true and legit. However, again, no one's told me directly, you're too young or you're too inexperienced. However, I'm sure that has in the past probably deterred people in the beginning.
Well, again, I'm just trying to use some analogies to maybe play with it a little bit. Does it maybe rely more on the toolbox, right? The contractors that you have behind you, the property managers that you have behind you, are they kind of vetting you at that level of, hey, outside of where you're at today, do you have kind of the backing to make this deal happen?
That's definitely part of it. But I think a lot of it too is people do business and want to invest with people that they know, like, and trust. So that's why we have a very community related aspect to our business. It's not transactional in any sense. We look to add value as much as we possibly can, and we vet them out as much as they vet us out. Right? We want to work with very specific type of people. We want to have only certain people within our investor communities, so that way everyone has the same collective goal, and we're not, by any means not on the same page. So I think it goes both ways, but yeah, it's definitely, we have a criteria. They probably have a criteria. Typically, when we first talk to them, we try to outline that and make sure it's a good fit in general. If it is, we can go deeper into what the strategy is and our experience and the rest of our team as well. But we typically don't lead with that. We want to see if it's even a good fit from the start.
So going into 2025 with some pretty large goals yourself, are you looking to kind of grow and scale your operation, or more so look to grow and scale the sponsors and investors to then move forward with a larger team?
So definitely always looking to improve and scale our investor community of like-minded people. Our sponsor and the team we have behind us, we're pretty much exclusive partners right now. We're working together for the next 3 to 5 years on that 1,000-unit collective goal, which is awesome because we can actually reduce our expenses because we're investing in one market. That when you do it at scale, you can reduce your operational expenses. However, we're always looking to expand our portfolio. We have a lot of, pans in the fire per se right now, irons in the fire, but we're always submitting offers. We're looking to grow our investor base and make sure that we can provide these opportunities to future investors and current investors on our list as well. That way they can benefit from the real estate without having to be the landlord.
As we kind of wrap up here, Whether it be from something you mentioned today or something that maybe just on the back of your mind, what's one major piece of advice you would give to somebody looking to pursue this themselves, right? They've been involved in some small residential stuff. They've been involved in wholesaling. They're looking to kind of go to that next level. Do you have any kind of advice for them?
Find a mentor. That would be my advice. If you have never done a larger deal, try to find someone who has, and just try to add value and learn from them as much as you can. It's literally as a cheat code. They're going to change your mindset, which will change your approach, which will change your results for the better. And they will most likely keep you in check and talk about things that you never even knew existed, whether it's strategies, operational stuff, day to day, whatever it might be. So I think the best thing you can do outside of learning on your own is learning from someone who's been there and done that and applying the lessons that they give you.
And in the meantime, until they can lock down a mentor, was there any educational items from your mentor or from your own personal adventures you found, whether it be books, podcasts, videos, whatever, that really benefited you on your journey?
Yeah, so there's a pretty stereotypical answer. I got my start with Rich Dad Poor Dad. I think many real estate investors did, many people in business did. However, if you want to go deeper, there's other books out there. There's podcasts to listen to. Brandon Turner is a great guy to listen to in regards to syndications. We also have a lot of opportunities on our own website and education, stuff like that, whether it's webinars, ebooks, anything you're going to need to at least get a feel for what syndication or these types of investment opportunities are. Then when you look to do it yourself, I would just highly recommend finding someone that's done it before, because the operational side is most important. And that's where businesses either fail or succeed. And in order to obviously have them succeed, you need to operate correctly.
And if someone either wanted to follow up and talk to you or find a way to join your community, how can they get a hold of you?
Yeah, so you can find me personally on LinkedIn. Just search Ryan Twomey Real Estate. Pretty sure I'm the only one there. But to learn more with our company and our strategy and different opportunities we offer, you can go to our website, trcapitalpartner.com. Again, we have a ton of educational resources, including an ebook called The Passive Income Playbook. I will say that this type of investing is not for everyone. It does take a specific person with certain investment goals, but you can also join our investor club and schedule a quick 15-minute, 30-minute call with our team to see if it's a good fit. We are regulated by the SEC, so we can't even send you opportunities until you do so. So we're always looking to establish these relationships ahead of time, and that way we can see if these opportunities would help you fill the gap in your lifestyle or your financial portfolio.
Absolutely. Plant the seed early and be there for when it grows, man. I love that. And I appreciate it too, dude, because again, it's all about providing education and trying to get the word out there. So, man, we definitely appreciate your time tonight, and man, we wish you the best.
Yeah, thanks for having me on.